Hello traders, welcome to my channel. So today I'm gonna be explaining on how you can use the RSI to catch spikes. So this works in boom and also in crash. So most people know that the RSI is normally used as an indicator to indicate levels where there's an overbought and an over sold level. But apart from that function, the RSI can be used for the two main things that I'm going to be explaining, which can also be helpful when catching spikes. The RSI can be used to, firstly, I'll talk about indication of a trend. The RSI can be used to indicate the trend direction. Okay. The other function is that the RSI can be used for levels of what? To indicate levels of support and resistance. To indicate levels of support and resistance. Okay, so that's all. So if you check on my chart, you can see these are the indicators that I have. Okay, let me first of all explain how this strategy works and how these two functions of the RSI can be used to what? To catch spikes in conjunction with the what? With the exponential moving averages. So I'll start with the function where we have the RSI indicating the trend direction. For example, I'm in boom 500. As you can see, we can use these key turning points. There was another spike. We can use these key turning points to identify where a spike is going to occur. I'm talking about these points. So in this case, this normally applies when you are, I'm talking about these points. The first one, the second one, and this one. Okay, this normally applies when when the market is trending. Let me repeat this. When you're using this function of the RSI to identify the direction of the trend, if it's an uptrend or a downtrend, this normally works when the market is trending. Okay, so this function is useful when the market is trending, like what is happening currently now in boom 500. We can see that it's in an uptrend, and you'll be able to catch more spikes. So how this works is this: you're gonna use the first two spikes. You will not be able to catch these first two spikes. The first two spikes are there so that you draw your trend, but definitely you'll be able to catch the third and the fourth spike. So I'm talking about this spike, this area where there was a key reversal. This spike 1, 2, you're not going to be able to catch them. You're gonna use them to draw a trend line. This trend line, this is the trend line I'm talking about. This one on your RSI, you use the 2 points to draw your trend lines, your trend line. And whenever the market comes closer to the trend line, you can see there was a spike, this big spike. So you wait for the market to come to your trend line. At this point, I was going to wait for the market to get to this point, and I was going to be able to catch this spike. As simple as this. Okay, so that's the first thing. The second part of this function of the RSI as a trend line is that you also need to have key levels on your RSI. So I'm currently using RSI 14, period 14. So I will identify my key levels. So if the trend line is closer, okay, I'm talking about this point. Let me put a circle. I'm talking about this point. Okay, on this point, we can see that the RSI again is on another key level that I've identified. Level 50, RSI level 50. is a key point. So it's closer to the key point. I know that at this point, they are going to be what? They are going to be spikes. So that's another confirmation. One, it's near the trend line, or it's on the trend line, and it's also near a key reversal level. In my case, it's level 50. Okay, I'm talking about this level. You can see that the RSI, when it was closer to that level, on this level, again it was also touching the trend line here. It's another confirmation. There was a spike. So you can only use the RSI to do that. But another confirmation can also come from the fact that, as I explained in my previous videos, that you can also use the exponential moving average to catch spikes. The 10 exponential moving average, which is the green line, to catch spikes. And again, my 10 exponential moving average is confirming that there's going to be a spike. Because what happened on this point is this: when this second spike occurred, it was able to break this moving average, the green moving average. So when the market is now above the green moving average, when it comes back, the moving average is going to act as a level of support. So I know with these 1, 2, 3 confirmations that this a spike will definitely occur. So I'm not going to hesitate or to take the trade with any fear. I'm confident of the fact that the spike is going to definitely occur. So this is how you catch spikes using the RSI as a level, the RSI to draw a trend line, and you catch spikes. Okay, let's look at an example that is in crash. So like what I said, those spikes where there are stars on the main chart, those stars, you can we're going to use them to draw our trend line, which we have on the indicator chart there, indicator window of the RSI. Then we're going to catch those spikes that are in red. As you can see that these spikes were occurring where there was they were touching the exponential moving average. So that's a confirmation that one, they are on the trend line, and again there's also a touching of the moving averages. So we're going to be able to catch 1, 2 spikes. These are the spikes that I'm talking about. Okay, this spike and that spike. So so this is how it works. It works in boom, crash, 500 and 1000. So let's talk about the other use of the RSI. I want to give this, I posted it in my Telegram channel. So I want to give this as an example. So you can see that in this example, we can see that, okay, I want to explain the function where the RSI acts as a level of what? Support or resistance. So in crash, it will be acting as a level of what? Resistance, because you're looking for an opportunity where you can sell. So you identify your key levels. You have to identify your key levels, and you draw your resistance line. So in this case, I was going to use, let me use arrows here. Sorry. I was going to use this small spike and this one, so that I would be able to catch this spike, this one which went down. So you have to identify your key levels on your RSI, the levels that were respected many times, where spikes were occurring. Your RSI indicator comes to that point. 1, you wait. Then you check if your moving averages are also what? Are also, if the price is also touching the moving averages, you know that a spike would definitely occur. Because if you look at it here, on this point, the RSI indicator is also on our resistance level. And again, it is closer to a what? To a key level that we have identified. So, sorry. Then here again, the exponential moving averages are now acting as what? A level of resistance again. So this combination would definitely help you to be more profitable, and you'll be able to what? To catch spikes. So this is a good example that we have in what? In crash. Let's look for another example. So in boom, the same applies. So you can see that on this identified level, on the RSI level 3.77, this level, it is an identified level and a verified level that spikes normally occur on that level. So you know when the market comes to that point will act as a strong support and spikes will occur. You can see there was this spike and there was that spike. So you can also use the RSI alone to catch these spikes. But in most cases, this normally applies in a ranging market. This use of the RSI normally applies when it's a ranging market. When the market is doing a correction or there is a consolidation, it's not trending. But once the market starts trending, that's when you have to use it. Use the RSI, for example, here. You now use your RSI to draw trend lines, and you'll be able to catch more spikes. So these are the indicators. So on your main chart, you have 3 exponential moving averages. So this is the first one, 50 exponential moving averages. You can choose your color that you desire. Okay, then the second one is the 200 exponential moving average. So these are the parameters. Take a screenshot and save these settings. Then the next one is the 10 exponential moving averages with these colors. So you can use any color of your choice. Then you can also take a screenshot and you have these settings. So the last indicator is the RSI with these settings and parameters. So you can use those levels. Just take a screenshot and you can have this and you click done. So on these levels, let me talk about these levels. So on the levels, sometimes you need to do a background check and you identify on your RSI key levels where there were more spikes or where there was a reversal. And after doing that, you come here and you just put those levels, or you can simply come and draw these levels on your chart. You can simply, like what I'm doing here. I had my already identified levels, but then I noticed that some of the spikes are occurring on this point, so I had to draw this support level. So sometimes you have to do that so that your key levels can be very accurate, because you don't want to be to miscalculate. Then you wait for long for spikes to occur. So with this, guys, I'm done with my video. Please, if you haven't subscribed to my channel, please do so. Share, like, and comment. Your feedback is muchly appreciated. Thank you so much for your time. Stay blessed.